Banking has come a long way since the days of bartering and trading goods. Today, we can easily access our money from anywhere in the world thanks to the advancements in technology. But how did we get here? Let's take a journey through the history of banking, from its earliest beginnings to the digital age. The first known banking system dates back to ancient Mesopotamia, around 2000 BC. People would deposit their grain, livestock, and other valuables in temples, which acted as the first banks. These temples would then issue receipts to the depositors, which could be used to withdraw their valuables at a later time. The Greeks also had a rudimentary banking system, which involved lending money at high interest rates. The first bankers were money changers, who would exchange coins from different regions and charge a commission for their services. During the Middle Ages, banking became more sophisticated. Merchants and traders needed a safe place to store their money and valuables, and so the first banks were established. These banks would issue letters of credit, which allowed merchants to conduct business without carrying large sums of money with them. The Renaissance saw the rise of banking families, such as the Medici in Italy. These families became powerful and influential, lending money to governments and financing large-scale projects. The Industrial Revolution brought about significant changes in banking. Banks began to issue paper money, which was more convenient than carrying around heavy coins. The first modern banks were established, and they offered a range of services, including loans, savings accounts, and investments. Today, banking has gone digital. We can access our accounts from anywhere in the world, transfer money instantly, and even pay for goods and services using our mobile phones. The history of banking is a fascinating one, and it has played a crucial role in shaping the world we live in today. As banking became more sophisticated, governments began to establish central banks to regulate the banking system and control the money supply. The first central bank was the Swedish Riksbank, established in 1668. The Bank of England was established in 1694, and it became the model for central banks around the world. Central banks were given the power to issue currency, regulate interest rates, and act as a lender of last resort. In the United States, the Federal Reserve was established in 1913 in response to a series of financial panics. The Federal Reserve is responsible for regulating the banking system, controlling inflation, and promoting economic growth. In Europe, the European Central Bank was established in 1998 to oversee the monetary policy of the Eurozone countries. The ECB is responsible for maintaining price stability and promoting economic growth. The Bank of Japan was established in 1882, and it is responsible for maintaining price stability and promoting economic growth in Japan. The People's Bank of China was established in 1948, and it is responsible for regulating the banking system and controlling the money supply in China. Central banks play a crucial role in the global economy, and their policies can have a significant impact on financial markets and the lives of ordinary people. The history of central banking is a complex one, but it has helped to create a more stable and prosperous world. The evolution of banking technology has been rapid and transformative. From the first banknotes to the latest mobile banking apps, technology has changed the way we interact with our money. The first banknotes were issued in China during the Tang Dynasty, around 618 AD. These banknotes were made of paper and were used to replace heavy coins in commercial transactions. The first ATM was introduced in 1967 in London. ATM revolutionized banking by allowing customers to withdraw cash and check their account balances outside of banking hours. The introduction of computers in the 1970s and 1980s allowed banks to automate many of their processes, such as account management and transaction processing. Credit cards were introduced in the 1950s, and they allowed customers to make purchases without carrying cash. Today, credit cards are widely used and offer a range of benefits, such as rewards points and cashback. The latest innovation in banking technology is mobile banking. With a mobile banking app, customers can check their account balances, transfer money, and pay bills from their smartphones. The evolution of banking technology has made banking more convenient and accessible than ever before. As technology continues to advance, we can expect to see even more changes in the way we interact with our money. Banking has had a significant impact on society, shaping the way we live and work. Banks play a crucial role in supporting small businesses, providing loans and lines of credit that allow entrepreneurs to start and grow their businesses. Banks also play a vital role in the housing market, providing mortgages that allow families to buy homes and build wealth. Banks provide student loans that allow young people to pursue higher education and improve their career prospects. Banks also support charitable organizations, providing funding and resources that help to improve the lives of people in need. Banking has also played a significant role in globalization, allowing businesses to operate across borders and facilitating international trade. The impact of banking on society is profound, and it has helped to create a more prosperous and interconnected world. The future of banking is exciting and full of possibilities. As technology continues to advance, we can expect to see even more changes in the way we interact with our money. Virtual reality and augmented reality could revolutionize the way we bank, allowing us to access our accounts and make transactions in immersive digital environments. Biometric authentication, such as fingerprint and facial recognition, could replace traditional passwords and make banking more secure and convenient. Cryptocurrencies, such as Bitcoin and Ethereum, could become more widely accepted and integrated into the banking system, providing an alternative to traditional currencies. Artificial intelligence and robotics could transform the way we interact with banks, providing personalized assistance and automating many of the routine tasks currently performed by humans. The future of banking is full of possibilities, and it will be shaped by the creativity and innovation of the people who work in the industry. One thing is certain, banking will continue to play a crucial role in shaping the world we live in.